Hi, so today we're diving into a small cap Japanese stock, which might sound obscure, but good investments can be found anywhere, so why not Japan? Shinoken has popped up on my radar because Mohnish Pabrai has made a sizable investment into this company. Mohnish Pabrai is far smarter than me, and I think his investing philosophy is exactly in line with what I think is common sense. Pabrai himself says that shamelessly copying the best investors in the world is a very good idea, so today I plan to look into why he himself invested in this Japanese stock. For those of you who are new to my channel, well, welcome aboard. I'm going to analyze the company Shinoken today by looking at the industry they are in, the competitive forces that they face, the management team running the business, my valuation, and then my opinion. Now, if you don't know some of the terminology I use, look, don't worry at all. Just sit back and follow along as best you can. It's part art and part science anyway. I'm trying to help as many people as possible understand what they're actually investing in. See, most people spend more time researching their next computer or their phone than they do their next investment. Now, if you have a stock you would like me to cover, look, please make sure to tell me with some real reasons why it could be a potential 100 bagger. So that's a stock that can go up 100 times over the next, say, few decades. So it will most likely need to be under $1 billion in size right now. So just remember that when you're leaving me a suggestion in the comments below. Now, I'm getting a lot of my information here from Value Investors Club, which is a great place to read about companies. Plus, I'm reading a thesis written by Raper Capital, which I'll link in the description. So Shinoken is in the apartment real estate world of Japan. They have a broad range of offerings, and this is important as they have actually multiple streams of revenue. Now, the real estate market moves in cycles, so having multiple revenue streams is really important to smooth out the inevitable real estate bubble and pop. So specifically, Shinoken develops apartment projects, sells the apartments, and also acts as a property manager too. These management arrangements are giving them this growing reliable revenue stream. And this is better than a typical developer who just sells the apartments and then moves on to the next project. So the customer stays as a long-term customer rather than just a one-time customer. But seriously, there is nothing radical happening here. Property development and property management has been around for many decades, so why is Shinoken special? Well, in my opinion, it's their very solid historical growth, which we will get into a little later. Now, the apartment market in Japan hasn't been growing at rapid speeds or anything. Like most of the world, the growth in apartment prices is somewhere between 0 and 5% per annum on average. But the market size that Shinoken is playing in is gigantic. Tokyo is the biggest city on the planet, and the fact that Shinoken is only representing 1% of all new apartments in Japan, there is a very big market to grow into. Now, currently their market capitalization is under 400 million US dollars. So they are a small cap company in a big marketplace. Exactly what I like to see in a long-term opportunity. The company has some interesting growth plans for the future as well. They are launching a REIT to raise money for further expansion. They will continue growing their management side of the business each time they sell an apartment, and they can easily expand further into Japanese cities and throughout Tokyo. Japan has 125 million people and is the world's third largest economy. So like I said earlier, Mohnish Pabrai, one of my favorite authors and investors, has just recently invested in Shinoken. It appears he holds more than 5% of the company now. Mohnish doesn't always hit home runs, but he does find great value and does very thorough research. He is far smarter than me, and I respect his process and his experience. So this is a big reason why I would want to invest. But let's keep digging. So Shinoken are in a very competitive space, so defining a clear competitive advantage is actually a bit difficult. The only competitive advantage that I see so far is that they are focused on a particular niche. They target small apartments for single people within 10-minute walk of a train station. They have occupancy rates above 95%, which is above the 80% industry average. This proves their niche is a strong one to target. But look, we have to be honest here and say that besides having a niche, they don't have a competitive advantage. This is a red flag for me at the moment. The next issue I see is the real estate industry faced a mini crisis back in 2018 in Japan. There were scandals all over the place. So banks have been caught forging loan applications in the past. A construction company in the industry didn't meet building standards in over 1,300 apartments, and a direct competitor TIKR was found guilty of forging documents. So by the end of 2020, they were ordered to stop real estate development. Now, although Shinoken had no involvement in any of these scandals, the whole industry reputation has taken a big hit. So actually, on the plus side, I do think this presents an opportunity for Shinoken to gain market share as their rival TIKR goes out of business. This could be a big win for Shinoken in the future. Now, a sign of a competitive advantage and good management is a growing book value. Essentially, this means how the value of the business is improving year on year. And the past decade has been exceptional for Shinoken, growing at about 40% compound annual growth rate. This must be a huge reason why Mohnish Pabrai has invested. These numbers are just very strong, but we have seen they are slowing a bit of late. Now, gross profit margins have reduced a little from about 23% back in 2016 to now 20% in 2020. This isn't dramatic, but these numbers are not very high when compared to other companies that I like. But in real estate, these numbers are actually very reasonable. Now, regarding net income, it has stayed flat for the last few years. But when considering the 2018 scandals and then the pandemic, flat is actually not that bad. I think I can only give them a half mark here for competition, as I can't see a clear point of difference that makes them seriously unique. But that book value growth shows they are doing a lot of things right. Shinoken has been a compounding machine for the last 10 years, so they are obviously winning a lot of business. Firstly, the CEO, Hideki Shinahara, owns about 18% of the company. Now, that is a great feature of a compounding business when the CEO has such a large stake in the company. The future of the business directly affects his net worth, so we are all on the same page. Now, the next two metrics are the compounding metrics that I think are vitally important. They show how the business can use its money to make more money. And the first one we're going to look at is return on equity, and it has actually been declining since 2018. It was super strong and consistent at about 40% for a long time, but has since fallen to about 13%. Look, this is another red flag, but the reason is because of the 2018 scandals and the 2020 pandemic affecting their sales and then their expenses. Then we turn to return on invested capital, or ROIC, and it has suffered the same fate. It was flying along at about 30% until the last 2 years, where it has declined to about 13% as well. Pretty much the same situation as that return on equity. Now, regarding debt levels, they have come down a lot of recent times, which I really like to see. Debt is the number one reason why businesses can get into trouble. Normally, property developers I completely ignore because they carry too much debt. But Shinoken has a very respectable 0.87 debt to equity ratio, which although is slightly above my preferred 0.7, it is exceptional for a property company. Then when I turn to the current ratio, it is at a 2.8 at the moment, and that's well above my 1.5 goal. So debt is well managed and probably one of the best I have seen in any real estate investment before. So with high CEO ownership and good debt levels, the only issue is that declining ROIC and return on equity numbers, which were very good prior to 2018. So I'll give them a half mark as it isn't perfect. Okay, so value is going to be the key here. I think there is a higher risk with this investment as the business does need to return to its strong growth and high compounding ways. But if we can get a bargain, then the upside could be really high with minimal downside because the company has just such a strong balance sheet. Okay, there are actually a few ways I can value Shinoken. Since it is a property developer, I can just compare the current price to book value with their historical average. So right now, it's actually late February when I'm recording this, and the price is 1,250 yen. That is a tiny bit over 1 times their price to book. Historically, over the past 10 years, it has traded close to 2 times its price to book. The reason for this discount is the market is saying that the scandals and the pandemic have broken the business and it isn't a good business anymore. Now, my first thought is that the business model isn't broken. We are just going through a difficult period for the industry. So from this simple valuation, and if we think Japan will return to normality and people will want to buy apartments, well, this company is close to half price at the moment. Now, if you think this is too big of a variable, as we have no idea if the real estate market will return to normal in Japan, then there is no point investing and we might as well stop right now. But my opinion is that people need to live somewhere away from their parents, and people like to live in cities and near train stations. Okay, so another way to calculate the value of a real estate company that has variable free cash flows is to look at the earnings per share and calculate that out into the future. This is a method I have taken from Phil Town. Okay, now here's the formula we're going to use to add up the earnings per share for the next 10 years to get a future earnings per share number. So we look at the earnings per share at the moment, multiply that 1 plus the growth percentage of the company to the power of 10 for 10 years, and that will give us the future earnings per share. which, based on my calculations and using 12% as the growth rate, we get 466. So now we take that future earnings per share number and multiply it by an expected multiple. Now, an expected multiple, we can either use the historical highest PE that the company has had, or we double the growth rate. I take the lowest of these two generally. So doubling the growth rate would be 24, but the highest PE the company has had over the last 10 years is actually about 16. So I'm going to use 16. So that gives us the 466 multiplied by the 16 to get 7,454 yen. Now the next step is I divide this by 4 to find its current fair value, and that will give us 1,864. Then if I want to get a margin of safety, just like Phil Town would recommend, I halve that again. Then this would give us 932 yen as a great price to be buying shares. Now what I did was I used 12% as the growth rate, and I think that's a bit conservative off the current depressed 150 yen earnings per share. I actually think it's more than likely this returns to normal faster than that, and earnings return back to say 20% growth like we've seen in the past. So a more bullish scenario would be to use 20% from the current levels, even though it could even be better than this. So using the same calculation as before, but now I use 20% as the growth rate, I would get a buy price of 1,858 yen, and that's still including a 50% margin of safety. So with the share price around 1,250 yen, my range for this would be somewhere between 930 and 1,800 yen per share as a buy price. Plus the price to book method that I used earlier, it gives me a good buy price right now. So if you were really liking this company, right now is a pretty good entry point. Now, by the way, I'll be buying Shinoken through Saxo Bank, which gives me access to the Japanese stock market with very reasonable fees. I have a Saxo Bank link in the description if you are interested in trading a trading platform that works for Japanese stocks. Okay, so the negatives I see are this. The company has had a downward 2-year period, and I can't be certain it will go back to its compounding ways. Number 2, other Japanese companies in the industry have been wiped out by illegal activity. Just because Shinoken has nothing to do with this doesn't mean there won't be a scandal facing them in the future. And the third negative is I just can't see a really clear, long, sustainable competitive advantage, except for that they will improve efficiencies as they scale bigger, and they serve a specific market segment. Look, these aren't very strong competitive advantages in my opinion. But on the other hand, the positives are they are a small company in a massive market. So the upside potential is big and the pathway to growth is really simple. Their historic book value and compounding rates have been historically very good. Therefore, returning to these levels will make a great investment. Management is doing a good job with debt levels, and the CEO has a big stake in the company, which I love to see. Then Mohnish Pabrai, a very smart investor who I admire and respect, now owns more than 5% of the company. Shinoken has a lot of signs of a long-term compounder. So do I think Shinoken is a good company to invest in right now? So I think the upside here is just a lot better than the downside risks. If the company just keeps executing its business, I could easily see 20 to 40% compounded returns for a long period of time. And since they have a good balance sheet and very manageable conservative debt, I think the downside risk is very minimal. One good thing about real estate prices is that they normally don't fluctuate wildly either. The only thing I can think of that will blow this up is illegal activity, which considering 2018 the whole industry came under intense scrutiny, I would hope the chances of Shinoken being part of that now is really low. Now, based on those compounding rates I said earlier, I think this could be a 5, maybe 20x return in the next 10 years. Therefore, it is an asymmetric risk and worth putting an amount of money that I can afford to lose. It isn't a sure thing home run, but I can see why Mohnish Pabrai thinks it is a heads he wins, tails he doesn't lose much kind of investment. Now don't forget to subscribe here to my channel so you don't miss my future videos. Hit me up in the comments if you have an opinion about Shinoken and maybe another proven company that has big upside potential. And obviously you will need to investigate a lot further if you want to invest yourself, but this hopefully has got you started. And a big thank you for staying to the end of the video, and I will see you next time.